I'm Thiago Veza, a senior fellow at the McKinsey Global Institute and one of the authors on our update on geopolitics and the geometry of global trade. We examined a surprising development in 2025, which is that even in the face of the largest tariff shock in about a century, trade continued to outpace the growth of the global economy in 2025. This chart shows how different sectors contributed to global trade, that's the width of the bars, and global trade growth, that's the height of the bars. The key engine of trade in 2025 was really AI. AI-related goods accounted for about 1/3 of total growth. Inside of every big data center, there's the chips and the servers that rely on supply chains that crisscross the globe. So this was a massive piece of the puzzle. But other advanced manufacturing sectors also grew quite quickly. One reason for this is that China shipped more industrial intermediate inputs to other economies as they develop their own manufacturing hubs. We call this China leaning into becoming a factory for the factories. But of course, not every sector grew quickly. Tariffs pushed a lot of trade away from the US and China corridor, and only a part of this was replaced by other partners. This led a lot of basic manufacturing sectors, for example textiles, to grow slower. And finally, resources were a mixed bag, and trade was really shaped by commodity price fluctuations, which continue well into 2026. So what's the key takeaway? Every year, shocks like tariffs ripple through the global network. But underneath the surface, it's really the deep economic transformation waves that often play the largest role.